Hey there, financial navigators. Welcome back to the channel where we demystify the markets and shine a light on unique trading opportunities. Today, we're diving deep into stock that's been popping up on our hard-to-borrow screener with some truly eye-watering fees. Catheter Precision, Inc., trading under the ticker VTAK. Get ready to understand exactly what's happening with this medical device innovator. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with a quick profile of VTAK Catheter Precision, Inc. This company operates in the crucial healthcare and medical devices sector, focused on cardiac electrophysiology or EP. Their flagship product, the View Interventricular Onset System, is a non-invasive imaging system that provides 3D cardiac mapping. Show VTAK logo/product image. This tech helps diagnose and treat complex heart rhythm disorders. With a market cap currently sitting around $2.05 million, VTAK is definitely on the smaller side. Now, looking at its recent price action, VTAK has seen some significant headwinds. Today alone, it's down 11.78%. Over the last 5 days, it's down 1.85%, and looking at the last 30 days, we see a decline of 20.81%. Share price chart volume has also been notably low today at 865,904 shares, which is just 0.1 times its 30-day average volume of 13.6 million shares. What is cost to borrow and why it matters? So, what does it mean when a stock is hard to borrow? Well, it all revolves around something called the cost to borrow, or CTB fee. When you want to short a stock, you first need to borrow shares from a broker. The CTB is the annualized interest rate you pay for the privilege of borrowing those shares. Think of it like a loan fee. Sure animation of short selling process. When this fee gets extremely high, it tells us a few things. Either there's very high demand from short sellers to bet against the stock, or there's a very limited supply of shares available to be borrowed, or often, both. When borrow fees start to climb into the hundreds, even thousands of % annually, it signals a significant squeeze on the supply side, making it incredibly expensive for short sellers to maintain their positions. Why this stock is hard to borrow right now. And this is precisely where Catheter Precision, VTAK, gets interesting. Our screener flagged VTAK due to its staggering cost to borrow fee, which is currently sitting at an annualized 943.7%. Highlight 943.7%. Not only that, but this fee has seen rapid momentum, jumping by 194 percentage points over just the last 5 trading days. What's driving this? The supply of borrowable shares for VTAK is incredibly tight. As of right now, there are only 4,000 shares available to borrow against an estimated float of 2.0 million shares. That's an extremely thin supply. Our internal composite squeeze score for VTAK currently stands at 56.7 out of 100, reflecting this intense borrow pressure. This combination of astronomical CTB, rapid momentum in that fee, and an almost non-existent supply of shares makes VTAK a prime example of a stock that is extremely hard to borrow. Squeeze mechanics explained. So, how does this relate to a short squeeze? For those new to short selling, it works like this. A short seller borrows shares, sells them, hoping the price will drop, then buys them back at a lower price to return them, pocketing the difference. But when a stock like VTAK becomes hard to borrow and its price starts to move up, short sellers face a double whammy. Show visual of price rising, their short positions are losing money, and they're paying sky-high borrow fees, currently 943.7% annually for VTAK. If the price continues to rise, or if their broker demands the shares back, short sellers are forced to buy shares in the open market to cover their positions. This forced buying creates additional demand, pushing the price even higher, trapping more short sellers, and creating a squeeze as they scramble to exit. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. Before getting too excited about potential squeeze plays, we always run a dilution risk check. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can absorb buying pressure and typically lowers the price per share, effectively negating or significantly hindering a short squeeze, even if the cost to borrow is extremely high. For VTAK, our look-back window shows no recent dilutive SEC filings such as -1s, -3s, or 424 BS within the last 90 days. We also found no recent reverse splits for Catheter Precision in our checks. So, at least for now, this particular risk appears to be low for VTAK. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given VTAK's current situation, what should you be watching for? First, keep an eye on the cost to borrow fee. Will it continue to climb beyond 943.7%, signaling even greater pressure? Second, monitor the shares available to borrow. With only 4,000 shares currently available, any further decrease could intensify the borrow constraint. Third, look for a significant shift in buying volume. Remember, today's relative volume for VTAK was just 0.1x its average. For squeeze to materialize, we need to see a dramatic increase in buying interest, breaking the recent trend of negative price action. Finally, observe the price momentum. A sustained move upwards would be the ultimate indicator that short sellers are starting to feel the heat. At precision, VTAK presents a fascinating case study in a world of hard-to-borrow stocks with an incredibly high 943.7% CTV and razor-thin borrow supply. While these metrics scream short squeeze potential, it's vital to remember the current negative price action and low volume. As always, this analysis is purely for educational purposes to help you understand the mechanics of short interest and borrow fees. Do your own thorough research. If you found this deep dive into VTAK helpful, please hit that like button, subscribe for more unique stock insights, and let me know in the comments if there's a stock you'd like us to analyze next. Thanks for watching, and happy trading.